The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We'll start out the show with the DAX like we always do. As you can see, we had a move down to the 78% retracement yesterday, a little bit of a rally, a pullback to a 61% retracement, and now we have the potential of this ABCD pattern happening in the DAX, very similar to what we have in the E-mini S&P, which we will post a little bit later. But I wanted to get some things out of the way today. At the break, we're going to have Bill Koval of WDK Analytics. That will certainly today. I've already spoken to him. Also, we're going to take our hats off to Norm Linsky. On January 27th, he had a special show saying that the top was very, very close, if not imminent, and that was the top so far in the market. And I repeat, with a great deal of trepidation so far, because this thing seems to have legs that no one even thinks it has. But we'll see how it ends up on the week. So far, we've had a down week in the Dow, which has surprised a few people that it doesn't really mean very much. I've also posted the link that Norm emailed me this morning about the Super Bowl. For the past few years, he's come on and given us the winners of the Super Bowl. His reasoning behind that is right here. He's looking for the NFC Atlantic Falcons to be the winners of the Super Bowl for some various reasons that are beyond my pay grade. I actually don't bet on sporting events. I'll tell you a funny story here. You might enjoy this. From 1976, well, it was actually 1972. I used to bet on $50 a game, 2 or 3 games at college, 2 or 3 games on the pros every weekend, and I kept really good records of how I did. And year after year, I would be $50 higher to $50 lower. And one day I was watching a game with my daughter, and I was doing my charts, and it was a Saturday morning, and she jumped. She said, "Dad," she says, "can I sit on your lap?" And I said, "Sure." And she said, "Dad," she says, "how much money do you have bet on this game?" And I said, "Did your mother put you up to this?" And she said, "No, I just want to know." I said, "I think $50. She says, "Is that a lot of money to you, Daddy?" And I said, "No, it's not any money at all." She says, "Dad," she said, "I think you're going to have a heart attack." She says, "because every time something happens, you yell and scream and you say such terrible words, Dad." She says, "This is not good, Daddy." And from that day on, that's been over 37 years ago, I have never bet on a football game, a baseball game, a basketball game, any of those things. She gave me a little bit of leeway because she knew I liked to play the Kentucky Derby, the Preakness, and the Belmont. So I do play the ponies to the tune of about $100 on each of those races, but that's about it. Never made another bet. So I acted as a bookmaker to some of the guys. They would put a bet down, and I would take the other side of it. I won those kind, but that was a little different story. Okay, let's move on to the markets. Folks, I'm going to show you the next chart that we really need to pay attention to. This is something that we've been talking about for quite some time here, and that was that low we had down there at that 1184 level. In the gold, it was a 382 retracement. As you can see, we've exploded out of that C leg right there, and look at the strength of the C leg, folks. These last 2 days have been extremely strong. Look how it came off of the bottom at the 1182 level. That is a really, this is much more powerful. This tells us that we're most probably going to exceed the 61% retracement up at the 1260 level and go all the way up to 1300. And folks, as we've said many times, should we ever get above 1378, the target on that is $200 higher. And if it gets $200 higher, it could easily go another $800 higher. This is a long-term bullish pattern that has potential to have legs. We've looked at it before. Take a look at it again, because I think it's something to pay attention to. It's got something that could really get this thing moving over a long period of time, and you want to pay attention to it because Well, look, so far, yesterday we had a $18 correction. All of our corrections have been between $11 and $20 all the way up since we bottomed, back in December. So we just made another $17 move up today. So that would probably tell us that, actually it was $24 because we had a low yesterday at $11.98. So it was $28. So this thing looks really bullish. The price pullback to look to buy, folks, is we've had all of our corrections have been between, the big ones have been between between 17, which is 1/2 the harmonic of 34, which is the harmonic number in gold, and $20. So look for about a $34 correction. We haven't had one of those yet. So it should be between $34 and $40. That would be the correction. And if it comes in an ABCD format like we had with this last one we had at the 1180, the actual low was 1179.90, but the 1184 level is where it all lined up, so very, very perfectly. There you go. That could be it. That 1199 would be something be very, very close to. Well, no, it has to be lower than that. See, 40 would be 1189 might be the next one. But you don't want it to have happen in one day. You'd like to see it happen over a 2 or 3 day period. So that's the key. But we're having moves in silver too that are good. Platinum is good. They're all coming off of this 382 perfectly that we focused on Monday. And this is not bearish. This is not bearish stuff, folks. That's that's the bottom line of what we're watching here. So keep in mind that it's a very, very important thing to watch here because it's a really good indication of what's going on with some of these markets. Another one that we talked about is going to be hitting. This happens to be a commodity that I don't trade, period, but someone's asked a question about it, and this is the cotton market. This comes from one of our listeners down in Jackson, Mississippi, one of my favorite little towns. And you'll see here that we're going to be making a double top here in cotton sometime this morning up around the 78 cents level. The thing that is really nice about this cotton is that if you look at it down at that 71.50 level, we had a 20-man line setting there. We had a perfect 61% retracement level. It hit it exactly, and it just moved up nicely to the tune of about 7 cents, and that's a pretty substantial amount, well over $3,000 in cotton. I don't trade it for a whole lot of different reasons. I got so many things going in foreign exchange and all the other things. It really doesn't make any difference whether you trade any cotton at all. That's absolutely for sure. I want to talk just a little bit about yesterday when we did the trade in the Apple. I ended up losing $1.50 on that one. The NASDAQ worked out really well. That one has done very, very nicely. Unfortunately, the Apple did lose. Now, I'll look again for another pattern over a day or so, but I actually don't, my focus is basically on futures and Forex. Do watch some of the key stocks and seeing, what's going on. Today, the big stock that they're pushing, of course, is Facebook, and that's another interesting one that would be fun to watch. So we'll take a little break here, 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS Taz proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the Taz Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're going to go down memory lane here a little bit. Let's go back to 2007. I wanted to point out to you that on October the 7th, we did have a new moon. We also had a new moon on the 27th of January that Norm Winsky pointed out. If you'll notice, between August the 15th and the October high, the market was up about 25% over that 3-month period. Pretty much what's happened this time between November, December, January. Whether this high on the new moon is going to be good for a long period of time, I don't know. But you do have that 20-man line that's in there that is relatively interesting here in the 2007. This August 15th low was very, very important because it was right after that that I became almost a regular. Yeah, well, I guess I was about that time. I guess it's been that long. But I was on the phone with Tom O'Brien. I was in Las Vegas for the Money Show, and Skype had went out that day. And so Tom and I were on the phone. The Dow was down 350 that day, but the Russell 2000 was actually up on the day, and from there you see we ran up and made new highs, but after that, you know, it was down to the down section. Now if we take a look at what was happening with the Russell after that point, we'll take a look at that. You'll see what occurred here. You'll see the August 15th level in here right at the bottom there. It was making a 61% retracement off the April low. And as you can see, we went up and we made an ABCD Gartley pattern, almost a perfect double top, and then came down quite a bit. Remember, we had a lot more volatility in the market at that time, and there was certainly a lot of other players that, you know, that was there at that point. So anyway, we'll keep an eye. That's one of the advantages of being in the Tiger Den. And if you're lonely, a good place to go is www.tfnn and go into the Den. They can give you some really great ideas on trades, alert you to news events, We have our own Dan Rather here at TFNN, Mr. Fletch. He puts into just about everything that is interesting in the news, and along with a few other folks. And of course, we have Basil Chapman, Steve Rhodes are in there all the time. So it's really a big thing, if you're looking for news and different ways of, trying to skin the cat. And believe me, there's a lot of different ways to skin the cat. That's for sure. You want to be very, very aware of that. Now, I've been asked to take a look at the grain markets here. I'm going to start out here with the corn market. These markets are under a great deal berry sentiment, but as you can see here in this corn, really nice moves. We just moved about 12, 13 cents right off the bottom of the new moon, and it was really a very, very fast move. We've seen a move in soybean oil that we talked about. That moved well over a penny a pound, which is $600, which was a pretty nice move for one day. Whether that means anything longer term, I don't really know, because these are just patterns that are lining up that I can see where you don't have to risk a great deal, and that's pretty much what I'm watching about. So those are the main things that I'm paying attention to for the same thing. We have a interesting chart today in Facebook. I wanted to bring it up because it's just like I'm not going to give any recommendations in Facebook today, boys and girls. I took my $1.50 hickey in the apple yesterday, but as you can see here, we had a 3 drive to a top pattern in October. The market broke quite a bit. It broke well over 15%. We went up and we made a double top. And now with the news tonight, we were trading up in this 137 level. The CD leg measures to 138 and change. So this should be an ending move. But with this big gapping of the old highs, I don't think it's a continuation gap. But I've been surprised many times in the past. So keep an eye on that, and you'll see that's what you're looking for. I've had a request to look at Kansas City wheat. I don't look at Kansas City wheat. I don't trade it. I use Rich Anderson as my backstop on that. I basically trade Chicago wheat, but Kansas City is heavily traded, of course, but I'm not too much interested in that, and that's the main reason. So I won't go into that. To watch it very, very closely here. Now, we've already covered the DAX. Now, the next one I want to cover, of course, is the S&P, E-mini S&P, and I'm trying to find where I put that little puppy, and I know I got it here somewhere. Oh dear, there we go again. Missed it again. Well, I'll have to dig it out later. Anyway, we will look at we'll take a look here at the New York Stock Exchange Index yesterday and the action that we had there. You'll notice that we did have a start of the rally. We went right up almost into the gap area, just right near the 61% retracement. We missed it by a couple of pennies, and then we sold off quite a bit. But right now it's just in this trading range between 22.62 and 22.85 is what it looks like right now in the market for the E-mini S&P. It does have some downward price projections. I've got it right here now. I just found it, and we'll bring it up here. And I think this is about where it's trading. We got down to 22.65 last night, 22.64. So far, that's held. And you'll see that, but if that breaks, if that 22.62 breaks, you're going to be looking at 22.44, which is the 78% retracement of the whole range going back to January. And it's also a beautiful ABCD pattern coming in there at the same time. So the longer term pattern would be at 22.44. Should we get above the 22.86 level, then you would be looking at a potential of maybe even making a new high if you can do that. And believe me, these things can really be very, very volatile, as you know, and that could happen, very, very quickly. That we're seeing some of those things occur. So those are the main ones that we're watching. As far as the U.S. dollar is concerned, folks, we've had a pretty good move on the upside in the euro. We've finally got above that 108.30 level. That's getting down to almost our price level that we'll be watching here in this dollar index. This is the really key one to watch. It's been a one that we'll be watching here very, very closely. and we'll take a look at that. By the way, we did have Bill Meridian on, of course, on Tuesday, and he said that the month of February is, with all the cycles that he's looking at, has a very, very high probability of being a down month. The first couple of days, of course, started a little bit weak, but whether the rest of the month goes on or not, we'll see why. We'll see that very, very closely. But remember, Bill does some really extensive cycle work that is extremely important, and I believe that you have to pay attention to his work, along with Mr. Winsky, Shane Smolian, and all of our guests. They're all pretty good. You have to give them credit that they've done some really spectacular things, with the calls some of them made. And we have some bad ones in there, of course, but we never invite those guys back. No, that was a little joke, boys and girls. Okay. Someone's asked a question: why am I not willing to sell the Facebook at 138 if I was willing to do Apple? I got too many irons in the fire, folks. I have some positions in the stock, the S&Ps. I have positions in gold, and I have some positions in a few other markets, the grain markets that I'm interested in. So I really don't need the hassle. If I want to take my mind off the gold, I will go over and look at one of the weird currencies like the Australian dollar or the New Zealand dollar. 877-927-6648. Stay tuned for Bill Koval.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have Bill Koval from sunny Scottsdale, Arizona on the line. Bill, how are you?
Yeah, doing good, Larry. Good to talk to you again.
Good to talk to you, and I guess you want to talk about one of my favorite markets, the gold market today?
Yeah, I do. I put together some charts to review here just by way of suggesting how traders can approach the gold market, which is sometimes flaky, as we know. It can get pushed around by inflation, deflation, currency moves, and wars and other things, including false flag operations. And I'm going to lead into the first chart, which is going to show, false flag effect on gold during that 2000 or 9/11 crisis. And the prelude to that is I just ran across a blog post here the other day from a blog called Philosophy of Metrics, and it lists many banker caused false flag incidents starting back in the 17th century with the City of London and the Dutch war, the Dutch bankers' war on England itself, where they overthrew the government, and it's a real good intro. And what essentially his thesis is, and the whole reason for his blog, is that he says, what's going on now in the world is that there's false flags being created around sovereign central banks, along with a war on cash, in order to transfer the entire monetary organization to supranational outfits such as Bank of International Settlements and maybe to a lesser extent the IMF. And it's very interesting. I'm going to send my slides to anybody who signs up for if my free newsletter. However, I'm going to also include this blog post, and it's a real eye-opener. And just one last comment on that before we look at the slides. We all know that the war on cash is heating up quite a bit since India did it so successfully here recently, and hardly a peep out of their citizens. And now, just within the past week, the Eurozone is putting together a transition or white papers and things about the very same topic, which is to eliminate cash. So this is all moving a lot faster than what I imagined, and might affect my price projections on gold here at the end of my my little spiel. But before I get to the first slide, or the first slide, if you want to put it up, it's number 1, of course, and perhaps you have a
yes,
comment.
I've got that one in, yes.
You might have a...
I like your comments because it shows, what we're watching. I like to hear what you have to say because I have an interest in the gold, and I would certainly like to hear another opinion because I have a tendency to be wrong quite a bit. So I can learn something. I certainly appreciate it. So go ahead. You've got the mic.
Sure. Well, all of us are wrong on gold a lot because, as I say, it gets pushed around for non-fundamental reasons, and the fundamentals, of course, relate to inflation, deflation. And since gold is a store of value, it sometimes gets affected for good or bad during crises. And not always do gold traders get it right. I mean, they'll push it up, during sometimes during certain crises when the obvious effects, the fundamentals are not going to affect it, in a positive manner. So the first slide here illustrates the gold back in the 911 area. Slide number 1, and you can see the horizontal yellow line there, which is effective bottom, which happened a little bit before the 911, which is the highlighted purple bar. Now, I had a little newsletter myself going on back then, a different one from what I'm doing now, tiny little thing, and And amazingly, I pointed out how the stock market was coming down quite a bit for 9 months before the 9/11 occurrence. Now, here you can see much the same thing in the gold market, and where it actually bottoms before that, whereas the stock market was more or less contiguous or about the same time that the crash happened, and then it went up from there. So again, this is a false flag incident which pushed gold down, and however, from that low, it bounced up like 29% within 8 months. Says the slide, from about 255 up to 330 in price. So why don't we go to the next slide, and then we'll look at a little bit later phase.
Okay, you're ready.
So slide number 2 is looking at bull moves, and then slide number 3 is going to look at bear moves. This is a simple way I've developed. Probably other people are using it. There's nothing proprietary about it, but this is a way to understand, in the heat of battle, when stocks or commodities are going up and down, you can kind of get a sense of if it is in an uptrend, as like the outer bands are indicating it's in an uptrend, then what you want to do is focus on the pullbacks in a bear or in a bull move. And, that's where you want to focus on buying. Now, this shows a number of moves, and a lot of these you're going to get 10, 15%, maybe a little less, maybe more. And I'm not suggesting this is entirely the way you want to trade gold. I'm putting together a little small white paper about how to, in the context of long-term accumulation, how you can use techniques like this to trade in and out of it. That's essentially my preferred thesis. I'm kind of a trader at heart, and I like to kind of maximize what I'm doing, and this is a way to do that. You can trade around an accumulation, if you will, or you can trade around a distribution, long-term distribution pattern too. So. Any questions or comments at this point before we go to 3?
No, this is good. I like to see the way that you're showing the harmonics in the gold, and I'm ready to move on to number 3 if you're ready. We've got to take a break here in just a few minutes. What we'll do is we'll finish up with this. Start with chart number 3 when we come break.
Sure.
And then that'll give us a little chance to talk some more. And I also want to get your comments on the stock market, because we've had you on before, and you've been pretty much spot on some of these things. And we would like to hear what you're going to be telling us in stocks also when we come back from the break. So stay with us. We have Bill Koval of WDK Analytics. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
We're with Bill Koval of WDK Analytics. And Bill, you're talking to us about the gold market. So I'd like to hear what you have to say, and we'll go from that level and tell us what you're looking at.
All right, Larry.
We're on chart number 3, by the way, Bill.
Exactly. And this illustrates a deflation in gold prices, a downtrend, if you will, and it's the same technique as we saw in the previous slide, where you're looking to sell the rips, if you will. And, with simple trend lines, you can oftentimes nail those pretty well. It's a little bit tricky. I've shown this technique many times with our unique proprietary volume charts. And the volume, and when we narrow down to like daily or weekly, it really helps you quite a lot to nail those points. I'm sorry I didn't focus on it too much here, the volume, although in this...
No, this is I have a question. Let me ask you a question. I like the trend lines like this because this is what I used when I first started trading, was just a valid trend line where you connect the lows. And as you can see, some of these breaks on these charts, and this is a weekly chart, have been really spectacular. So I think it's a very good technique. Is what you have to do is you got to stick with it, because sometimes you're going to get false breakouts, and you've got to be able to but the technique, I think, is excellent. I know some guys that use it all the time that are very good. But again, you've got to be able to reverse yourself, when the trend line, goes back to being in effect.
Sure. The last chart illustrating, which is number 4, that kind of summarizes this technique in both an up and a down market, relates to the recent, we're focusing in now here on late 2016, during the big ramp looking towards an assured Hillary Clinton victory in the presidential race. And, that was the lead up all the way from December 15 up to, August or so. And then things started to get a little mucky when Trump, came on the scene. And initially there was the stronger Trump got, the lower prices went down into, we had into October, and then there was a little blip up there to 1340, and then initially we got a negative reaction when Trump started to lead, and then now we've had a terrific bounce since the election of Trump's election was confirmed. And this just simply illustrates how you can play that even in the face of, there was a lot of fake news going on then, of course, and it affected the market quite a bit. But the technique still worked, pretty well. And the last chart.
Now you've got one other chart here that shows that. Okay, let me get it up here first, Bill, and then we'll talk about this. Is chart number 5, which is the last one, and there we are. This is chart number 5. By the way, if you folks would like to have a copy of these charts, Bill will tell you how to get in touch with him, and he'll be happy to send them out to you, I believe. So let's go on with this chart showing the gold on a quarterly basis and then also on a monthly basis, so we can see it longer term.
Sure. In short, the longest chart here, the quarterly, shows a bearish volume pattern. That's the turquoise and white dotted line. It's way above price, which indicates the volume is overbought, and that's a pretty good indicator that you're going to see lower prices. Now, I have to admit that there's a couple things that might intervene here. First of all, the monthly and weekly, and even the daily, are more bullish than that. The active volume on those shorter frames is actually supporting price. So that's why, even though I expected ultimately to go to 800 because of this long-term overbought, short-term, like the next few months or year, it could trade well up to 1500 possibly. But I just have to believe that there's going to be a big crash down after that. For what reason, I don't know. Maybe false flag of some kind, a news item, war. I don't. I really can't predict. But for years, I've used these volume lines, and I have to do them on multiple time frames, but they've been pretty darn accurate. I sum up.
I can certainly see that. Yeah.
Yeah.
Hey, Bill, one of our listeners would like to get your feeling on what the stock market is doing right now. We've only got a couple more minutes. Could you give us a little recap of where you think we are here in the market, the stock market indices?
Well, I'm developing new trade signals, which are just about done, and as a part of that, I've taken a look at everything that I've done and constructed some long lines and things, particularly around some simple moving averages, and all the way from the 20-day up to the 80-day moving average have rolled over, and so I think there's going to be a meaningful pullback here. I'm respectful of how the market has reacted to Trump, and I know the reasons why. But in the intermediate to longer, pardon me. In the intermediate to longer term, I'm quite suspicious of the market, and I think there's going to be a lot of room for gold to move in that time in a positive direction.
Okay. Well, listen, how will the folks get in touch with you, Bill? Give us your email address and your phone number so that if they have an interest, they can catch up with what you're offering. And I think it'd be interesting to a lot of our listeners.
Sure. The web address is wdkanalytics.com, where you can see a lot of information, sign up for the free newsletter. And as far as email address, it's info@wdkanalytics.com. And we will sign.
Okay, that's really good. Now we've got. I'm sorry for the delay because of the when I'm on Skype, it makes a little bit of a delay here. But anyway, this is Bill Koval of WDK Analytics, our guest today. You can reach him wdkanalytics.com, and we'll have you back on, Bill, sometime in the near future. How's that?
Sounds good, Larry. It's my pleasure.
Okay, thank you very much, folks. I got another break coming up here in a little bit, and we'll get back to a couple of these markets that look pretty interesting today. The fact that hold on one second, we'll take a break and we'll be right back. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We're winding up the show here today. I've just posted a chart in here today of the crude oil. As you can see today, we went up and completed the Gartley exactly within 4 ticks of a contract that's worth $54,000 and change. We sold off a little bit, about 80 cents a barrel since that time, but we're now down on the day, and if crude oil should close sharply lower today, like down $1.50 or even more, if that's possible, that would be a reversal day coming in at a Gartley pattern. So pay attention to both the heating oil and the crude oil, because we did go up there and hit those levels very, very importantly. And speaking of levels, I think it's important that we take a look here at the euro, because that's one that we follow very closely, looking at the index for the dollar. And you'll notice that we did get up to this 108.30 level, then we came right back down below it right now. So this is going to be also a key day in the dollar index, the euro, the crude oil, and then of course always the stock indices. They're critical, every single day. So those are the main things. Be sure to protect yourself, folks. By the way, I thank you very much for those of you that emailed me about using the 15-minute way to stop looking at the monitor all the time. Two of the folks actually said it worked for them, so I was glad to hear that. But take your chances and listen to me on this one, folks, because if you don't watch that monitor, you're going to do a whole lot better with your trading than if you don't. That much I can nearly promise you. So pay attention to that, because if you don't watch the monitor, you're going to be far, far better off. No question about it. Go out and walk your dog, kick your cat, whatever you have to do, but stay away from watching the monitor. Come back every 15 minutes and then work to be a half hour. And that's the best way to do it. And believe me, it's not easy. You got to do it in baby steps. That was the only way Mark Douglas could ever teach me to do it, because I was addicted to the thing. I'd been doing it for years, and I'm a very good short-term scalper. I don't have any trouble with that, but it does affect you no matter what you're doing. It still affects you without any trouble at all. So keep that in mind. Stay away from the monitor. Go to TFNN. That's where you want to spend your time. Okay, folks, live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.